Hello, this is Dave Maddock with Maddock and Associates, and thank you for joining the webinar about patient-centered outcome research fee, or PCORI fees. In this presentation, we're going to talk about what the PCORI fee is, who needs to pay the PCORI fee, how to determine what the fee is, and how to pay the fee. Before we get into that, just review who Maddock and Associates are. We're independent employee benefits brokers, been in business for 40 years in Washington State, and we're to help employers with all their medical insurance needs, uh, dental, vision, as well as staying on top of all the new and changing compliance regulations. So disclaimer, before we get into this, I need to explain, we're Maddock & Associates is a benefits broker. We're not a tax accountant. We're going to be talking about stuff in the tax code. This is really just informational only. It's not to be considered tax advice. Each company has different facts and circumstances which may or may not be addressed in this presentation. And we want to make sure that you consult with the tax accounting before filing any tax documents to the IRS. So to start off, we'll just talk about what the PCORI fee is, or the Patient-Centered Outcomes Research Institute. It was created to help patients, clinicians, payers, and the public make informed health decisions by advancing comparative effectiveness research. So as part of the Patient Protection Affordable Care Act, also known as Obamacare, they threw in basically a research project that's designed to help research the medical system and try to figure out which ways of practicing medical is most effective and so forth. So it's basically just a big research project they put into Obamacare, and it's funded through this PCORI tax. The fees are also known as PCOR fees or SER fees, or I've also just heard them SERF, like surf, which kind of sounds cool. But anyway, they're all talking about this fee. The good thing about the fees are they are temporary. They're gonna end in about 2019. So they apply for plan years ending on or after October 1, 2012, but do not apply for plan years ending on or after October 1, 2019. So unless they extend these fees, they're just going to be for this portion of time, about 8 years. And then if you're subject to pay the fees, they are due July 31st for the prior year. And I'll get into that a little bit more, exactly who has to pay the fees and when. So who needs to pay the fee? The PCORI fee applies separately to specified health insurance policies and applicable self-insured health plans, and it's based on the average number of lives covered in the policy. So really, if you're on a fully insured medical plan, then it's up to the insurance company to pay for the fee. So where the employers have to get involved in paying these fees is if you're part of a self-funded medical insurance plan, or you have either a health reimbursement arrangement or a flexible spending account. So if you have a self-funded plan, an HRA, or an FSA, then you will have to either pay the PCORI fee or make arrangements for maybe someone else to pay the fee. Paying the fee is pretty simple, so most employers have been deciding just to pay it themselves rather than paying someone else to pay it. It's important to understand that if you have, let's say you have a health reimbursement arrangement alongside a fully insured medical plan, you will still have to pay the PCORI fee on the health reimbursement arrangement, even though that the insurance company is paying the fee on the fully insured medical plans. Dental plans, vision plans, life insurance, they're all exempt from the PCORI fee. So if you're not self-funded, or you don't have an HRA or an FSA, then this presentation, you can learn about it for your own purpose, but you really won't need to do anything, because if you just have a regular medical plan with none of these it's not self-funded, and doesn't have an HRA or FSA around it, then the insurance company will just take care of this for you. Now we're assuming you're either self-funded or you have an HRA or an FSA, then you will have to pay the fee, and then you have to determine on how much you have to pay. So the fee is based on the number of members covered under the plan, not just the employees. So members include spouses, children, domestic partners, so all the people, bodies covered under the plan. And then so it's for the course of the year, and there's a few different ways to calculate how to actually calculate the number of members, or it's basically the average number of members. And in the IRS instructions, you can read about different counting methods, but what we like to highlight is the snapshot method. It's pretty much the most simple way to do it. So at a minimum, you need to calculate the number of members on a quarterly basis and average it over 4 quarters. So when you do that, the IRS wants you to pick the same time of month once a quarter. So what you do is you pick a date, maybe like the first day of the first month of the quarter. You calculate the member count for the quarter using that same date every quarter. And then the PCORI fee is just based on the average member count throughout the year. One tip is to use your medical insurance billing statement to help you determine member counts. That should list all the employees enrolled. It should list if they have spouse and if they have children. You might have to dig a little deep. Sometimes the medical plan or billing won't show the exact number of children, so you might have to do a little bit more research to get that number. So and I'm going to give you an example of actually how to. Oh, here we go. Here's an example of how an employer would calculate it. And by plan year, they mean the ERISA plan year. And all of our medical plans, we run the ERISA plan year in accordance with the medical plan anniversary. So it's possible to not have that lined up. We would never recommend that. But essentially, the example I'm going to run is for a group that renews July 1, and that's their ERISA plan year. And it just goes, 12-month plan from July 1 to June 30th. So for this group, what we decided, we're going to use the first day of the month of each quarter. So the first day of the first quarter of their plan year is July 1. And that's going to be, they have 80 members in. And then next quarter, so we're always going to do the first of the month of the quarter. So October 1, they had 88, January 1, 92, April 1, 90. So that's 4 quarters of the year. We use the same, first day of the first month of the quarter every single time. And then we just add them up, divide by 4 to get the average. So this group, when we're paying the fee, we're going to base it off 88 members because that's what they averaged over the year. It gets a little tricky. The calculation is based on an October 1 through September 30th year. And the PCORI fee is actually indexed to inflation, and it's determined by when the plan ends. So you actually, when you're paying the fee, you're paying for almost 1 to 2 years back. So let's say you had a plan that ended between October 1st, 2013 and October, but before October 1, 2014. That payment would be due July 31st, 2015. Okay, so this plan, could end, like in our prior example, could end June 30th, 2014, and we wouldn't pay that fee until July 31st, 2015, or sometime before then. That's the deadline. And the fee would be $2 per member per year. Then the fee, it's indexed to inflation. So the next time period, when people pay in 2016, it bumps up to $2.08 per member per year. And so that's for plans ending October 1, 2014 and before October 1, 2015. So you have to go back a little ways when you're calculating it. It's not the plan. It might not be the plan year that just ended. It might be the year before that, depending on when the plan renews, on what date it ended. So for example, if you started a new plan November 1, 2014 or later, then you wouldn't have to pay those fees until July 31st, 2016. or even later if it was in 2015. So digging a little bit into how you actually pay the fee. The fees are reported and paid annually using the IRS Form 720. I'm going to click and open this up. It's just on the IRS website. And what makes this a little bit confusing is the form. This is a multi-purpose form, and it's used to collect all sorts of different taxes. And so I guess the IRS was being nice by not making a whole new form for the PCORI fee, but at the same time, it can be a little bit complicated because you'll see there's a whole bunch of stuff on here that probably doesn't pertain to anything you're doing. So anyway, this is a quarterly federal return, but if all you're using it for is the PCORI fee, then you can just do it once a year. However, some of these other things on the form, you may have to, if you're subject to it, you'll be doing this on a quarterly basis. So there's a link to the instructions on here, but you have your name of your company, and you'll see there's all sorts of different taxes like petroleum, oil spill taxes, local telephone service and teletypewriter service tax, fuel taxes, liquid hydrogen gas, all sorts of things. So you kind of just, and part of we say work with an accountant because some of these things may very well apply to your company. But what we're concerned with is right here, part 2. This is the spot we're looking for, the patient-centered outcomes research fee. So if none of these other taxes like fishing tackle box tax, if none of these other things apply to you, you're going to come right here to part 2, and you're going to look at this as the fee. And if you're not an insurance company, so most the HRA, FSA, and that's going to be considered, and the self-insured plans are going to be line B here. And this is where you put the average number of lives. So in our example is 88. The fee, and that was based on the plan year ending, either $2 or $2.08. And you multiply the average covered lives by the fee, and that is the total tax. And then you go down, you have to sign it and then send it off to the IRS with a check. So that's the form. As you mentioned, there's all sorts of other taxes on it. There may or may not apply to your business. The PCORI part is right here, section 133. And then right here is just kind of a subset of that, the 133, and explaining how we count up the lives. As I mentioned, the form, it says it's a quarterly form, but if all you're doing is filing the PCORI fee, you don't have to do it quarterly, you can just do it once a year. And as I mentioned before, please work with your accountant to verify the information on the tax form is correct. As I mentioned, this is a tax form. A tax accountant should definitely be reviewing it before you send it to the IRS so that they know what's going on and to verify that everything's correct and within the tax code as they read it. Okay, I hope you enjoyed this presentation. Any questions, we're here for you. Maddock and Associates. Thanks a lot.